Thanks for tuning into the All Funds Network. My name is Mike Schroeder. Today we're here with Skyler Steinke, and we're going to be discussing fund administration. This episode is brought to you by our friends at Richey May. Richey May provides audit and tax services for alternative investment funds. You could find the link to their website and contact information below in the description. Now back to the episode. This is a fun one. This is just the two of us. Skyler, obviously deep in the fund admin space. You've been in it for years, so excited for this call.
Yeah, absolutely, Mike. Great to wear my other hat of fund administration and talk about kind of what to look for in the space.
For sure. Yeah, absolutely. So this is meant this is part of our short series, starting a fund in 2026 series. So for those emerging managers, you're going to want to listen to this. We have other videos as well for audit, banking, legal. Let us know if there's other videos that you want to see. So let's go ahead and kick it off, though, Skyler. Maybe just start off by telling us, what does a fund administrator actually do?
Yeah, absolutely, Mike. And just a little background, obviously, I'm the managing director of the U.S. for the Ascent Group. The Ascent Group is a global fund administrator and also a Cape and technologies company. And to your initial question, what does a fund administrator actually do? That's always a question we get quite a bit. And there's always different layers of pieces to the puzzle that people talk about, but I'll just kind of simplify here. So at a high level, a fund administrator is the operating background of the fund, right? So we sit between the manager, the investors, auditors, and regulators to make sure the fund runs cleanly, consistently, and credibly. So everybody thinks NAV statements, accounting activity, and that's a part of it. But the real value is process, controls, reporting, and making sure the fund is institutional grade from day one. Mm-hmm. Fund administration isn't back office; it's infrastructure and trust first, is what I usually say.
For sure. Maybe it's for my perspective, probably the biggest things. I mean, obviously there's like AML, KYC. There's some things you guys will help out with banking, but maybe tell people what a NAV is. Stands for net asset value, but maybe break down what that is, because that's definitely one of the biggest roles.
Absolutely. And I'll kind of break down maybe just the features and services that fund admin actually provides. And I always kind of equate fund administration or running a fund to running a business, right? So when you launch a business, you may have a bookkeeper, you may have a tax person, you may have a bank account, all those things. Same thing in the fund space, right? So you're launching a fund administrator will be your kind of books and records. So they'll do the bookkeeping of the fund. So they'll do the accounting work. They'll calculate any fees or expenses that you have as a manager, and actually calculate all the at the portfolio level reporting that happens to each of the investors as well. In addition to that, so you have high level accounting, you have investor servicing, AML, KYC. So taking the investors into the fund,
doing their background checks and whatnot.
Background checks, treasury management, so money movements with the bank. So that's also another critical function to really kind of have that independence. So really, if you think back when fund administration was created, really there was many funds were doing the books themselves. It's a bit of a conflict to do your own numbers, right? So a lot of investors really push independence to have a fund administrator in the loop to really have that checks and balances on doing the work. And then obviously the fund administrator is working with the auditor as well on an annual basis. So it's really an outsourced operational team that a fund manager would have. That's what a fund admin does and is and continues to do.
For sure. And you mentioned the LPs. So that's kind of leading up to my next question. So what does, does investor and LP, what are their thoughts on fund admin?
Yeah, great question. So, investors look at, different aspects of what a fund does, right? When they're doing their due diligence, right? So it actually matters a lot more than the managers think, especially for emerging and first-time funds. So LPs or allocators may like your strategy, but they need confidence that the fund can actually operate, report, and scale. The administrator is really a proxy for that confidence, right? So they're looking to make sure that, everything is tightened up, not just from a strategy perspective, but just understanding how operational flow happens and how, they get the reporting, the investor statements are taken care of, all those things are happening on time. And, really the administrator is often the first real stress test of a fund's professionalism. So they're looking for independence, looking for controls and experience with the strategy where the admin can grow with the fund and there's no issues there.
For sure. Now, somebody's just starting off, they're setting up their fund right now, as we speak. When does the fund administrator come into the process?
I would say the earlier the better for most. I tell managers as soon as you start talking with your law firm, your legal, you want to have the administrator involved because there's a lot of aspects operationally just about being structured. And a lot of times the legal firm will have the administrator review the operational formation
Hmm.
docs,
Hmm.
uh, not after they're finalized, but in that process of drafting. So there'll be a lot of back and forth with the administrator on their feedback with the comments of the draft documentation.
For sure.
So yeah,
So definitely want to start that early.
exactly, absolutely. So I'd say it should be a post-launch fix. It should be part of the launch plan, having an administrator involved early on.
What is what separates a great fund admin from, an average one?
Yeah, a great fund admin is proactive, not reactive, right? So they understand the strategy, they anticipate issues, they communicate clearly, and scale with the fund instead of becoming a bottleneck. So that always comes down to, it's not just, proactive, but also just, we always bring up cost to with an administrator and comparison points, but it's really about fit. I'd say cost matters, but fit matters more. The cheapest administrator is rarely the least expensive over time if they slow growth or create friction with investors, right? So a great admin really feels like an extension of your team, not a vendor you chase.
Let's talk a little bit about the technology side. So, fund admin traditionally, maybe they give you a spreadsheet once a month. That's evolving today. Maybe talk to us about some of the different things that fund admins are offering to different funds. Different solutions that they have.
Absolutely. And there's a lot of evolution in this space. And on paper, this always gets asked too, because a lot of admins look the same on paper, right? They do accounting, they do investor servicing, they do treasury management, they do your books and records. So what is actually different? So um, we're moving toward a faster, more automated and more transparent fund operations environment. So we have, emerging technology. AI helps with data reconciliation, exception handling, reporting. There's other aspects when you get into more of the digital asset space, tokenization and digital rails, change ownership, transfers and reporting work. So there is, a big push to move faster, quicker, be more efficient. And there's a lot of legacy systems and tools that many administrators use today that are third-party systems that they don't control. So I think looking at where the puck is going, working with administrators that have new cutting edge technology in the last couple of years, and they're constantly innovating, not only for you but also themselves, right? Because I think the worst scenario is working with a fund admin that hasn't really innovated and kept up with technology and infrastructure. And now, unfortunately, as a fund manager, you potentially have a bottleneck down the road when there's issues or when you're trying to move quickly and there's a bandwidth problem.
For sure. And maybe we'll touch upon the different types of funds that'll come to you. I assume you get a liquid hedge fund. It's pretty easy. They give you whatever your Charles Schwab statement. It's all kind of contained. You got VC funds. There's going to be a little bit more involved there. I would think between VC private equity, you're valuing maybe some of these different assets or working with the valuation agent, and then obviously crypto comes in, and that's maybe even more of a curveball where you have private wallets, you got centralized exchanges. uh Maybe just for the folks out there listening, kind of break down some of the different features for these different funds.
Yeah, absolutely. And you kind of think about you said the different funds, right? So you have open-ended funds like hedge funds, liquid funds, and you have closed-end like venture, private equity, real estate. And every asset class has nuances, right? Digital assets, as you said, and there's a hybrid of both, right? You have Web3 venture digital asset funds, you have liquid hedge fund, crypto funds, but I'd say fundamentally they're the same, at a high level. You need accurate NAVs, you need clean reporting, you need strong controls. But other layers based on strategy or based on complexity can create some challenges, right? Obviously, you mentioned specifically digital assets or crypto. You're dealing with wallets, exchanges, on-chain data, valuation challenges, regulatory gray areas. If your admin doesn't understand that ecosystem, things break quickly, right? So having an understanding not only of strategy, but technology and connectivity of the portfolio across different pieces to the puzzle, whether it be counterparties, on-chain data, as we mentioned, all these things are important from
Hmm.
operational discipline point of view. Um, I think a lot of managers underestimate what is needed a lot of times getting into that, especially new time managers. Performance alone doesn't carry you if reporting is late or inconsistent, right? So having a good fund admin team around you that understands not only the strategy, but process operationally what needs to happen with technology.
For sure. On that note, what are some of the biggest mistakes that you see new fund managers making?
Yes. I'd say, especially emerging managers or someone coming in new, they may want to move fast and quickly. So they may start to try to do some of the work themselves internally, operationally. So where sometimes where they're coming to me and they're like, by the way, we already launched our fund 3 or 4 months ago. Books are a mess. And now we're having to back build and catch up in real time. And that's always a mess, right? It can create some issues with compliance. Maybe, they didn't do KYC appropriately for investors. All those things need to happen, and there's dependencies across process. So I think it's important to have your administrator early on to understand conversations and process and what needs to happen from the get-go, not trying to play catch up.
For sure. For sure. Um, let's spend one extra minute on crypto. Um, I think, and obviously just coming from the space myself, obviously we worked together in the past. Uh, Talk to us about some of the issues with crypto, because there are, like we talked about before, as calculating the NAV is pretty easy when you have, one simple brokerage statement from, again, the Charles Schwab, whatever, the Fidelities, where you're getting all those trades in just from one place. You're putting them together as a fund admin, and then you're creating, you got to put out the management fees, the performance fees. Uh, that's really simple. But then when it comes to crypto, there's obviously a lot more nuances. If you want to just dig into those high level.
Yeah. There's a good number, right? And I'd say even new folks getting into crypto don't fully realize the challenges. Even at a high level, you think of, for example, um, just the end of day close in the stock market, right? There is an end of day close time frame, 4 p.m. Eastern, whereas crypto runs 24/7. So when do you cut off the pricing mechanism or NAV, right? Is a lot of times we use midnight ETC or 4 p.m. Eastern, but all those different nuances we have to have an understanding, what needs to happen there. You also mentioned just different tokens, it sounds pretty simple, but in an accounting system, maybe they have 4 to 5 decimal points. Tokens can have, 13, 15, 18 trailing decimal points,
For sure.
which creates nuances with calculating, doing the accounting work or whatnot. In addition to that, you have on-chain data. So now you mentioned counterparties. We're not dealing with one, prime broker here, can deal with hundreds. And not only counterparties from a, centralized exchange, you have decentralized exchanges, you have OTC markets, a lot of different pieces to the puzzle you have to integrate into that portfolio on a monthly basis. So it's not as simple as a traditional hedge fund with one or two counterparties, right? It can be very complex. And then you add the element of in-kind contributions where investors are coming in, subscribing in
Right.
crypto
Great
and now
point.
they're dollared, right? And you have to be able to understand that process and do appropriate KYC of wallets. All these things
Yeah,
are
I guess
important.
there's a lot
Yeah.
of software that goes into it, and even you mentioned like new coins. I have for my personal portfolio, I've recently been buying coin that recently launched, and maybe even some of these meme coins. Like they're not, the software that I use is not picking up that data at all.
Right. Or missing fees, trying to scrape things from the blockchain, you're missing certain fees broken out. In addition to that, I would say the lines are blurred even more so in crypto and digital assets on what is open versus a closed-end fund. So you may have a venture fund that has liquid staking activity, you may have an open-ended fund with hard to value assets. We're seeing more so going forward. Basically, everything is in the same portfolio. So we have traditional assets combined with crypto assets, and you have to be able to understand and calculate everything appropriately and on time and correctly from a compliance point of view. And that takes a great level of expertise, takes a great level of technology, and your process around all those aspects.
For sure. And I guess kind of the next question leading up here is pricing. Um,
Yeah.
Give us an overview of pricing. Maybe talk about a simple fund, maybe a small handful of investors to a really complicated crypto fund with 100 investors
Yeah,
with some
yeah.
ballpark
Pricing,
numbers.
yeah, pricing can vary as we all know. I'd say, you have usually on the open-ended side, you have, a liquid hedge funds as an example, very simple. There's usually a monthly minimum subject to a basis point schedule. It can be, they vary based on strategy and complexity. Maybe monthly minimum could be around that $1,000 a month range ish, based on number of investors, number of investments. And the basis points can tier down. Maybe zero to a couple hundred million or 100 million. Starts maybe at anywhere from 8 to 6. It really varies based on the strategy, right? And then it kind of tears down as the fund grows. The idea being as more activity, fund gets larger, the price goes up a bit based on what's needed to be done for the fund, right? And then similarly on the close-end side, I would say you have a similar structure, where it's more quarterly reporting, right? So quarterly schedule, but there is no basis point structure attached to those. Usually it's just based on transactional activity in the portfolio, right? So more portfolio investments, more activity there. They'll add additional transaction level fees and things like that. So I'd say,
Yeah.
you can get something very, if it's very minimal activity, as a emerging manager, that 1,000 a month range or more. Um, and it kind of tears up from there as the fund grows. Other aspects, there's other ancillary costs relative to what fund admin does as well. Financial statement draft and notes. We work with the auditor for an audit prep. There's an annual fee for that. But those are all basically fixed fees. It's really the ongoing admin fees we're talking about here that have a minimum and or basis point structure attached to them
Yeah,
in certain
I think
cases.
that's an interesting factor to bring up because most of these other
Yeah,
service providers, or I don't know, to some degree at least, audit might be fixed,
right,
or legal might be fixed. A lot of fund admins charge based on basis points, which is
right. Assets
multiply
of the
the
fund.
side of the assets of the fund, multiply that by the number of basis points. So
Right, right.
cool. Um, well, cool. I think we've covered a lot here. This is again meant to be pretty high level, but Skyler, this has been great. Where could people go to connect with you?
Yeah, absolutely. You can go to the Ascent Group's website, which I know we'll include in the show notes, or reach out to me on LinkedIn. I'm pretty, I'm on LinkedIn quite a bit, so happy to answer any questions anybody has.
Yeah, reach out to the show. We'll put you in touch
Yeah.
with Skyler. Skyler, appreciate it, man. This has been fun. Thank you once again to our friends at Richey May for sponsoring this episode. If you're starting a fund, you need an auditor. Make sure to give our friends at Richey May a call and tell them we sent you.